Okay guys, today I'm just going to go over the ways to ensure you know how to put each of the journal entries into the ledger accounts. So before you do anything, you know that I want you to draw up your little table. Assets increase on the debit side. Liabilities increase on the credit side. So does owner's equity and revenue. And expenses decrease on the debit side. The pattern stays the same, debit, 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 credit, 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 credit. So having that in front of you reinforces the notion of double entry accounting to make sure that you do it right. Let's look at the debtors control. Debtors control is an asset account, okay? So because it's an asset account, the side that it increases on is the debit side. So opening balance will always go on the debit side. I'm just going to put X's in today to make life easier. From a logic point of view, the only other things that are going to go on the debit side of a debtor's control is going to increase the asset. The way to increase debtor's control is by selling more goods and including the GST with it. So the the end date, because we're posting at the end of the reporting period, the cross-reference will be sales or credit sales, depending on the T ledgers provided to, /GST clearing. Now, I've gone over 2 lines, that's fine. You need to make it bigger, smaller, no problems. That goes on that side as well. On the credit side, you've got to think about what makes debtors control go down, because it decreases on the credit side. So end date, the things that make debtors control go down is when they pay us back. So therefore our bank changes, and if there is any discount, the discount expense will be included. That's as far as we've got in terms of debtors control. All right, creditors control. Creditors control account is a liability account. So liabilities increase on the credit side. So the opening balance will always go on the credit side. Same as before, use logic. What makes creditors control increase? Things that make creditors control increase is the purchase of more stock, which we call stock control, and the GST associated with the purchase. The things that make creditors control decrease is when we pay them back and if there's any discount we have received. Stock control is our busiest account. It's an asset account, so the opening balance will always be on the debit side. The ways that stock will increase. First of all, if we buy more stock, okay? It's 2 ways to buy stock. We can pay cash, or we can buy it on credit. The ways that stock control decrease is selling it. Now the cross-reference is always the same, cost of sales. There'll be 2 cost of sales account. One will be the credit sale and the other one will be the cash sale. Okay, bank. It's our easiest account. The first thing to remember is that bank could have a balance on either side. It's an asset when we have cash in the bank, and so I have an opening balance on the debit side. If we have a bank overdraft, it creates a liability. So it'll have a balance on the credit side. So just make sure when you're reading the question, if the opening balance says that it's a credit balance or it says it's a bank overdraft, make sure you put the balance on the credit side. Okay, my opening balance is going to go on the debit side. I'll assume that it's an asset. The cross-reference is easier for the bank account just because so many transactions relate to cash. So on the debit side, coming from the cash receipts journal, we have all our receipts. That's increasing the bank account. That's why it's a debit entry. And on the credit side, it's decreasing our bank account because of payments. Goes on the credit side, and that's the cross-reference.